Assalamu alaikum friends, welcome to chapter 25 from your SBR textbook. So this is right after your lecture 25. I have finished with current issue. That was your last lecture, and after the lecture one chapter is there in your textbook, chapter 25. I think it's chapter 25 or 4, which is for questions and answer. So in question and answer we have 8 questions. That means 8 test your understanding. So I will be covering each in different videos, and this will be covering test your understanding 1. Okay, and each question is very different from each other. Okay, for example, one question is on integrated reporting, other question will be on analysis or ratios, this other question will be on group accounting. So each question is different, therefore I request that you see or go through all the questions, okay, from your textbook. If you are okay with this 8 questions, I bet that you have understood SBR. You can attempt, now you are in a position to attempt the revision kit. Okay, you can attempt any question. Okay, obviously this is much easier version. Your revision kit, if you see, it will be a more complex and more things will be there. But this is a basic, okay? This will give you a sound knowledge, a foundation. So this is a foundation level. If you do this, you can do any question. It's like that. So let's start with test your understanding cookie. This is from your textbook. Once again, Kaplan textbook of SBR, which is the last chapter. So let's start. And if you see the question, this is a group accounting question, but we'll read the requirements first. So discuss with calculations how to correct the accounting errors made in respect of investment in biscuit. So some accounting error has been made. Now you have to discuss and also you have to calculate how the investment in biscuit in the consolidated financial statements should be corrected. The moment you see consolidated, you know it's a question number 1, group accounting question, which is section A, right? Worth 30 marks. You have to provide the adjustments required. If any adjustments are there, you have to provide it. B, discuss how to correct the treatment of specialized plant. This is only for a specific thing, specialized plant. How to correct the treatment. That means some treatment they have done which is incorrect. Now correct it in the consolidated financial statement only. Okay. So now this you can do it in any order, this or that, does not matter. But first we'll do the first one. Okay. When you go to SBR, if you see the revision kit or your past paper, you know question 1 is always on group accounting, worth 30 marks. So this test your understanding 1 is a very good question for all your group accounting questions. Okay, you understand one question properly, you understood group accounting, everything about group accounting. So Cookie is a company that prepares its financial statements in accordance with the IFRS, and it has investments in several subsidiaries. Now let us see. Biscuit. How much was acquired? 60%. That means subsidiary. What is the number of share? 10 million $1 ordinary share. There is a gain on bargain purchase. That means it's not a goodwill. Gain on bargain purchase. You recognize it in profit and loss account as an income. Okay. So you have been given the cash consideration for value of NCI and carrying amount of net assets. Now, this is recognized in profit and loss. Okay. Even if they write it, even if they don't write it, you should know that the gain on bargain purchase, you recognize it in profit and loss as an income. Where do you recognize goodwill? Statement of financial position. Impairment of goodwill as an expense in the profit and loss. Gain on bargain purchase in profit and loss. Okay, and regarding the following bullet points, no entries has been made in the consolidated financial statement. This is exactly the same nature how your questions will be asked in your question paper, SBR. First bullet point, okay, as a part of the purchase consideration. So this is relating to this cash consideration, the first bullet point. Cookie issued 5 million of his own $1 ordinary share. How much? 5 million $1 ordinary share. They had a fair value of 4.5 each. Remember, consideration could be in any form. It's not only cash. You can give shares, mixed offer, cash offer, contingent offer, anything. So with this cash consideration, that is 30 million, you have to add this share. 5 million $1 shares into 4.5. Fair value has been given. Okay. Second, at acquisition date, Biscuit own an internally generated brand. This is relating to your net asset. It will have an impact on your net asset, remember. It's an intangible asset. Internally generated brand. But we know that internally generated intangibles are unrecognized. You do not recognize it. So this is unrecognized in your separate financial statements. Okay. But they have given you the fair value of the brand, which is 15 million. And they have given you the life, useful life also 5 years. Why did they give you the economic life of 5 years? For what purpose? To find amortization. Exactly, to find the amortization. And then recoverable amount of net assets. So the moment you see the word recoverable amount of net asset means impairment has been done. Maybe there could be an impairment, right? But we'll see. Including goodwill. Okay, was 107 at the reporting date. No impairment review has yet been performed. That means impairment review was not done till now. But recoverable amount, the moment you see the word recoverable amount, impairment has been done. There is an impairment. Okay, and at this reporting date, the retained earning was 84. Retained earning. They will give you the subsidiaries retained earnings. You need it in your consolidated statement of financial position. Okay, in a separate financial statements. All these are in the separate financial statements. Now you have to include it in the consolidated financial statements. You understanding? Second is specialized plan. Will not touch specialized plan yet. We'll first finish the first requirement relating to this. What is it? How to correct the error regarding to the investment in biscuit. Investment in biscuit is a very broad topic. In this, there could be so many error. Okay. For example, fair value of cash consideration. You have to add the share consideration with it. The carrying amount of net asset might be incorrect. So because of that, your gain on bargain purchase might be now incorrect. Impairment also you have to take into the picture. Amortization of intangible assets you have to take into picture. NCI you have to take into picture. So many things are there which you have to correct. Some things might be correct. Some things you don't have to. It does not mean everything you have to change, but most of the things, yes, you have to do the adjustments. So let us do for group accounting. One by one we'll touch. Okay. First of all, calculate what is the gain on bargain purchase. They told gain on bargain purchase. So start with it. Calculate. How do you calculate? It is simply cash consideration plus fair value of NCA minus this. So 30 plus 45. Add this to and minus 80. That is the formula to calculate goodwill, right? But if you see 30 plus 45 is less than net asset, less than 80. That means you are paying less than the amount of the net asset. So it's a gain for you. You have bought this at a gain, the investment. So 75 minus 8 is minus 5. But you don't write goodwill as a negative goodwill, negative 5. You write it, you recognize it as a gain on bargain purchase. You bought it at a lower price. So 5 million. This will go in the profit and loss. But error has been made. Okay. Error has, and when you're writing error, don't write all the errors in one place. Put proper subheading, divide it into different subheadings, paragraphs, and make sure that you deal with each error separately. So consideration, related to consideration is the first thing. How do you know? Okay, the best way to deal with any issue is go by the order that they have given you the information. For example, the bullet point. This bullet point will help you. First thing is regarding consideration. Second thing is regarding brand. Third thing is regarding a recoverable amount. That means impairment and also go by this order. This will give you a order, structure to your answer. So start with consideration. Okay. With standard. IFRS 3. IFRS 3. Okay. IFRS 3 says purchase consideration should always be measured at fair value whenever you have acquiring it. So in this case, you have to take that at fair value. How are you going to take the fair value? The shares that you have issued, you have to include this in the goodwill calculation. 5 million into 4.5. What is the number of share? 5 million. And fair value is 4.5. So 5 into 4.5, 22.5. Now, because of this, what will happen? Your goodwill will increase. How goodwill will increase? See, purchase consideration. This is your cash consideration. With this, you add 22.5 now. Okay, so because this is 22.5, this will go up, right? Goodwill will go up now. So goodwill will increase and also your equity will increase because share issue. How are you going to show this adjustment? So whenever they tell you to do some adjustments, they are telling you to do debit and credit only. What they're saying is do debit and credit. Show journal entries. That's how you do adjustments. Okay. Rather than writing in sentences and all, debit this, debit this, just show like this. It's very easy. It saves time. Whenever they say adjustments required. Okay. So start with debit first and then credit. Where do you debit? 5 million. That is your gain on bargain purchase to profit and loss. You cannot write debit gain or bargain purchase. You have to debit profit and loss account. In the profit and loss account, why? To remove the gain on bargain purchase. It's no longer a gain on bargain purchase now. It now turned into goodwill because of this 22.5 million. Wait. So earlier it was credit in the profit and loss as an income, the bargain purchase. Now debit it. So debit 5 million. Where do you debit it instead? Goodwill. How much? 17.5. How 17.5? What is it? Gain on bargain purchase is 5. So because it will increase by 22.5. So simply, should write with my pen. So it was minus 5. Let's take goodwill was minus 5. Now your goodwill will increase by 22.5. That means add 22.5. Use your calculator. You have a calculator. Minus 5 plus 22.5. It will be 17.5. That means goodwill is now 17.5 debited. Another way to do this is, it's a longer way. Just add 22.5 here. So 30 plus 22.5 plus 45 minus 80. You will see you will still get 17.5 only as a goodwill. Okay. Then credit where? Share capital. Very simple, 5 million. Because you are issuing 5 million. We'll go here. It's 5 million, one ordinary share. So 5 into 1, 5 million. And what about the rest? Remember, it was 22.5. But out of 22.5, only 5 million is share capital. The balance is under share premium, 17.5 credit. Now, always whenever you do journal entries, make sure your debit should equal to your credit. Otherwise, some error you have made somewhere. It should always match. So if you add both the sides here, 5 plus 17.5, it is 22.5 debit. And credit side 5 plus 17.5 again is 22.5. It balances. This is correct. Consideration part is over now. Now we are going to brand. Second bullet point. On the acquisition date, this also should be measured at fair value. Any identifiable net asset, because brand will come under net asset only. Intangible asset. This also recognized at fair value. Okay, so that means it should be recognized at 15 million. The amount is given here, 15 million. And 5 years the useful life. Okay, so once you recognize, add this 15 million with net asset, what happens? You always have to say what is the impact on the goodwill. Goodwill will reduce by the same amount. Goodwill will fall down by 15 million now. So debit your intangible asset, assets always debit, and credit your goodwill because goodwill will reduce. Whenever goodwill reduces, credit that. Why goodwill will reduce? See here. You are deducting this 80. It's a net asset. So if this goes up, that means you are deducting a higher amount of net asset because of that brand. So goodwill will go down. Now, after goodwill, don't just stop there. What about amortization? Amortization is there. So charge that amortization on intangible asset. Okay? That means on that 15. So 15 divided by 5, 3 years, 3 million is amortization. How do you do amortization? Debit amortization expense, credit intangible asset. Why credit intangible asset? From intangible asset, you have to deduct amortization. That's why. So now the carrying amount will be 12. 15 minus 3, 12. Remember, amortization expense. Okay? You have to, what? Any expense, whether impairment, amortization, depreciation, you always have to charge it with the parent and the NCI. Very important. Any kind of expense. So out of this 3 million expense, 60% will go to the parent of the cookie, which is 1.8 million, and the remaining 1.2 will go to the NCI. You have to apportion it like that. Okay, and what about the brand? Brand now has a carrying amount of 12. 15 minus the amortization. Now we are coming to the third bullet point, which is impairment. This is a bit long, if you see here. Okay, so it's a bit long. So I will go a little bit slow also. Okay. So once you have adjusted, remember goodwill has to be correct. First you have to adjust the above two with the goodwill, then you have to go for the impairment. Impairment comes at the end. That is the last stage. If your goodwill is incorrect, your impairment will be incorrect. So first find out what is the goodwill. Earlier, after adjusting the first, it was 17.5. Now that brand you have to deduct because goodwill will go down. So now your goodwill is 2.5 million according to after adjusting the first and the second point. Okay. So according, and it does not matter which one are you correcting first, whether the first one, second one, or third one. Maybe this you can write first, and that first things you can write last. It does not, order does not matter. Still you will get the same goodwill only. Okay, but this becomes easier for you because it is in the same way the bullet point has been given to you. So this becomes easy for you. Because anyway, impairment you cannot do without the adjustment of goodwill, which is there in the first two. That's why it's always advisable to follow the bullet order, to follow the order that they have given to you, the adjustment. And impairment you deal according to IS 36. Okay, annually you have to review for the impairment. Goodwill you have to review annually whether it has been impaired or not. Until now, no impairment has been carried out. So in this case, you have to see whether the carrying amount is more than recoverable amount or not. If it's, then it's an impairment, otherwise no. In this case, it will be. Definitely there will be. Otherwise, there is no question of giving you impairment. Okay. So first then write also that asset will be impaired if carrying amount exists recoverable amount. Now, in this case, you cannot say, okay, this much is the impairment for goodwill because goodwill does not generate independent cash flow. So that's why when you're doing this impairment review, this should be performed on cash generating unit. Make sure that you know what is CGU. Okay, you have to know both CGU and impairment for individual asset. Okay. So in this case, any goodwill that is arising, you don't have to gross it up. Why? Because you're using full goodwill method. What is the meaning of full goodwill method? That means you are valuing the NCI at fair value. When you're valuing the NCI at fair value, you don't have to gross up the goodwill. For impairment, you have to often gross up sometimes the goodwill. But in this case, you don't have to. That means this becomes easy for you now. So first find the year-end net asset. You need the net asset. Okay. Then add the goodwill also with it because goodwill is also part of an asset. And then compare your recoverable amount because this the recoverable amount is for the whole asset. It does not say that it's only for goodwill or it's only for the net asset without goodwill. No. For all the asset, you have to compare your recoverable amount. We'll see here. Recoverable amount of net asset of biscuit. So in the net asset, goodwill also will come, including goodwill. You see, including goodwill. They have specifically told you. We know the goodwill. Now we have to find the recoverable amount of net asset, sorry, the net asset carrying amount and compare this with 107. Understood? So that's why there's a list. What are you going to include in your net asset? Share capital, retained earnings, brand uplift, brand amortization. Brand amortization, why? Because from retained earnings it will be deducted. It's an expense. Brand uplift, why? It's a non-current asset. It will increase your net asset. Okay. The first bullet point, the consideration part will not have an impact on your net asset. That is consideration. Okay. Because of that, goodwill has changed, but that goodwill you have already shown here has 2.5. Okay. That's 2.5. So the first two bullet points did has an impact. One is brand uplift, brand amortization. So share capital is 10 million. How 10 million? You need to go up and check this one. 10 million $1 ordinary share. That means 10 into 1. 10 million ordinary share. Return earnings they have already given you at the end, which is 84. 84 they have given you 84. From where? 84. Here they have mentioned it. 84. Return earning is 84. So take that return earning also. Brand uplift 15 million it increased and amortization was 3 deducted. So 106 plus 2.5 add the goodwill 108.5 and carrying amount is yes it's more. It is more than the recoverable amount. Hence impairment is 1.5. Once impairment is there, you should know where you are going to debit, where you are going to credit. Debit profit and loss is an expense and credit goodwill. Goodwill will fall down by that impairment. Currently goodwill is 2.5. So 2.5 minus 1.5 it will become 1. So goodwill at the reporting date will be 1 only. Okay. Now because this is a full goodwill method, that means you're calculating NCI at fair value. You have to allocate impairment among the parent and the NCI. Don't forget that. Impairment I'm talking about. That's an expense. So 60% for parent, 40% for NCI. What is it? Only for the impairment. Don't take the goodwill. 1.5, 1.5. Okay. And goodwill is 1 million. Now we are going to part B, which is specialized plan. For that we have to read the case study. So included in their property, plant and equipment is an item of specialized plant also. This was internally constructed. Construction began on this date, completed on this date, is within 1 year only. Asset was initially recorded at a cost of 15 million and depreciated on 5 years. Breakdown of cost is given. How they have got that 15 million as a cost. Materials for construction, directly attributable labor, testing of machine. All these three things you can take as a cost of machine. But what about the last two? Training staff and allocated general overhead. 0.5 and 3.7. You cannot take it as a cost. They will come as an expense. Okay, so that only you have to mention here. Which standard? IS 16. Plant, plant comes, whether specialized plant or unique or common plant, comes under IS 16 only. Okay, so IS 16 says that items of PP should be initially recognized at cost only. Okay, that's why general overhead and training costs you cannot capitalize. You cannot take them as a cost of PPE. They must be written off to profit and loss account. They are expense. So 3.7 and 0.5. The last two items are expense, 4.2. So you debit your profit and loss as an expense and credit this. Deduct it from your property, plant and equipment. And then depreciate. That means divide by 5 after you deduct it. Okay. So here depreciation will start. When will depreciation start? That's another thing. Whenever it's a plan under construction, you have to see when it is available for use. From that day onwards only depreciation will come. Not from the day when you're starting construction. So depreciation for the year also will be incorrect. You have to correct it. How much will be the depreciation? What is the actual depreciation charged before? Before this, the cost was 15 and it was divided by 5 years. Correct? And into 6, only for 6 months. That means it's an error. You first have to find the error, then correct it. So earlier depreciation was 1.5 billion. Why 6 months? We'll see. Because you have to find till when? 30th April 2004. So, and this was completed on 31st October 2003. That means from 31st October 2003 until May. So November, December, January, February, March, April, 6 months only you can take. Right? Okay. So earlier it was 1.5. Now you have to minus that cost expenses from 15 and then divide by 5 and 6 months only. Now it's 1.1. So it should be less. Okay. That means you have to reduce it by 0.4, the difference, 1.5 minus 1.1. How do you correct it? You debit profit and loss by 0.4. Sorry, property, plant and equipment. Because your property, plant and equipment, the value will go up by 0.4. Depreciation should be less, value will go up and credit your profit and loss account. Because in your expense also it will be reduced. So credit it. Earlier it was debited, now credit 0.4. So that's it. So this is how you deal. Okay. It's nothing hard, guys. It's very easy. You just need to break down the big piece of information into small pieces. It's like when you have to eat a cake, a big cake. You don't eat a big cake at once. You take small pieces, right? Small bite each time. And ultimately you finish the whole cake. So this is also like that. Everything is presented to you, right? In one shot, you have to break down and process it like that. If you know this processing, it will help you. Okay, it does not matter which paper you are giving, which question you are giving, and for how many marks, what is the length, it does not matter. If you know how to process information, big chunks of information, that's the skill that you need to adopt. Okay, so that's it, and see you in the next. That will be test your understanding too.